Now for a quick disclaimer. Nothing you see or hear on the flight deck is investment advice. Nothing said today is intended as investment advice. Those participating in today's discussion may have bought, held, and/or sold the stocks discussed today prior to today's discussion and/or may do so afterwards. Remember, you are responsible for your own investment decisions, and if in doubt, you should seek advice from an independent financial advisor. Stocks can be high risk, and you may lose the entire amount you have invested. Please now sit back and enjoy the flight.
Okay, hello, and welcome to the Flight Deck, episode 10. On the call today, we have myself, Flight, and the usual Flight Deck crew. We have Roberto. Say a quick hello. Are you good?
Good evening, everyone. Good to be here.
We have Sporazene.
Hi, folks.
Good. We have Alaska Dubby joining the call from Alaska.
Hello, guys. It's probably colder in your area than it is in ours today.
Yeah. Okay. And we also have special guests, Max Easley, CEO, and Erich Krumanocker, Chief Development Officer from Pantheon Resources, who kindly agreed to join us for a fireside chat today. So we're delighted, guys. Max, how you doing?
Very well. Happy to be here. Looking forward to it.
Yeah, great. And Erich?
Yeah, very well. Thanks for having us.
Good. Well, just before we hit record, we were having a quick chat about our musical exploits, and myself and my producer, we were in a band together back in the day, guitars and drummers. I can see that there's a drum kit in the background there, Erich, and you guys have got a passion for music. Today, the fireside chat, I'd like to just riff around some of the things that have happened in the Pantheon story. As you know, the flight deck has documented the story of Pantheon Resources in Alaska. And so I kind of kick off, ask a question in terms of your background, introducing you to the flight deck channel. You both joined the company. Max, to you first. Just give us a bit of a view of where you were before you joined Pantheon.
Yeah, thanks, Flight. Yes, I just joined Pantheon, I guess, 9 months ago now. Seems like 5 minutes. I'm a rarity, someone my age. I'm a native-born and bred Alaskan. You don't find very many of us around. That's pre-Prudhoe babies. But when I came out of university, the University of Alaska, there was a war going on in the Middle East. And as a result, someone like me, a good student with an engineering degree, if you could breathe, you can get a job in the oil and gas industry. And I could breathe. So I had job offers from just about everywhere. But I only had one question. I loved Alaska. I wanted to start my career at Prudhoe because Prudhoe was a phenomenal place in the 90s. But my only question was, will you send me overseas? I wanted to see the world. Yes, you can see the world. And I learned my trade at Prudhoe Bay in Alaska. And Prudhoe Bay is phenomenal. And every reservoir mechanism in the reservoir engineering textbook exists in Prudhoe. The facilities are Middle East scale. Every well concept ever trialed in the world happened there. That was a great time to join because that's the year that Prudhoe came off plateau. And so you can imagine the innovation that poured into that place. So what a great place to learn your trade, you know. And then as good as a word, 6 years into my career, I moved to the United Kingdom and worked my way around the whole breadth and depth of the North Sea, from the deep water to the more conventional shallower water horizons. He was very good to me. They re-sprayed me. So I'm bilingual. So I understand engineering and I understand finance. And so they gave me that opportunity. And I found myself down the road as the chief financial officer of BP Trinidad and Tobago, which was at the time BP's largest affiliate. But so BP was very, very good to me. But in 2015, it was time for something new, the unconventional world. At this point, I'm an offshore guy. And so I entered Apache to run their Permian business, which was an unconventional play. And for me in those days, shale is a seal, not a reservoir. How do you develop this? But I found myself in very good company because in 2015, the industry didn't really understand unconventionals at all. So I learned with everyone else. But my advantage is I just came from BP. And at BP, we apply science to things, not just brute force. And so through understanding the reservoir, as it were, Apache went to the place where it was a leader in capital efficiency. So after that was done, after 5 years in West Texas, I wanted to do it all over again. So I went to Canada. And They have a large unconventional play there called the Montney, and the Malaysian state had acquired 1 million acres of it, and they had an LNG plant being built. How do you get molecules from one to the other? And so I ran that for them and grew that materially up to over 1 BCF a day.
Yeah.
And then I got the phone call about Pantheon. What about this 2 billion barrels in your backyard? Alaska is very meaningful to me. It's my home state. I'm native born and bred. Recently, I presented at the Resource Development Council there. It was like a high school reunion. I knew pretty much everyone in the room. And Alaska has been looking for a viable independent for 35 years. It's very difficult for independents to break into the North Slope. And so what was put in front of me is here's 2 billion barrels in your backyard. And by the way, it's along the pipeline and it's along the highway. Because one of the concerns on Alaska is infrastructure can be quite expensive. In this case, oh my goodness, it doesn't get any better than this.
Okay.
But the real technical or professional attraction to this was the Permian, drill 1,000 wells. It's all about execution. Montney, drill 1,000 wells is all about execution. But there's already a route map to that. In this case, of a collection of a portfolio, a very large field called Kodiak, and a collection of attractive satellites around. There's no route map to develop this. And the way Erich and I like to describe this is there's 2 types of problems in our industry, geology problems and engineering problems. You don't want geology problems because you can't change geology. You love engineering problems because you can change things and make things work and make things better. So this company really is an engineering challenge. And that's why the board of directors chose to bring in people like Erich and myself, because that's what we do.
Erich, can I bring you in? So how did you two guys meet originally? Because I think you've worked together before, haven't you?
Yes, great question. Unlike Max, I did not grow up in Alaska. I grew up in Colorado, and Colorado has some similarities, particularly the mountains. I grew up on, skiing. My grandfather was involved in kind of a lodge and restaurants up in the mountains. It's a town called Crested Butte. So I spent a lot of weekends going up there, ended up doing ski patrol and those types of things, and always had a dream of going to Alaska and considered summer jobs, etc., interpassage cruise, those types of things. And ended up going to Colorado School of Mines, graduated from there, engineer, just like Max, engineering degree. And when I got an offer from BP, they said, do you want to go to Houston or do you want to go to Alaska? And I said, there's only one choice, really. It's not an if, it's the only option here, which is to go to Alaska. I'd always want to go there. It just felt like it was an adventure that I really wanted to explore. So I ended up going up in Alaska just over 30 years ago, moved to Alaska and spent some time in the office doing reservoir engineering. Went to the slope, petroleum engineering, kind of, working on site, particularly at the wells. And so we get into some of those conversations. I have been there on those sites, and then came back into town. And this is probably where I first met Max, was when I was back in town the second time in Anchorage. And he was doing this role called optimization engineer. And I would describe that as the orchestra conductor of all the wells in Prudhoe Bay. And if you're in town and you want your wells flowing, you have to negotiate with this role. And that was where Max sat. I love that job that he was in. And of course, Max would like some time off when he's on rotation, sometimes vacation, sometimes training. And so I would always tell Max, anytime you need anybody to cover, let me know. I'll get on the airplane and come up there and cover it. That was kind of when I first got to know Max and established kind of, a bit of rapport. I just loved his job. In any case, that was where I met Max. And there was this international thing. It sounds like Max came in more with his eyes wide open. I think my international was going to Alaska. That felt pretty international, to be honest. It felt like a big adventure. And coming into a company and then realizing, actually, I can leave Alaska now. I've kind of had a good stint. An opportunity came up to go to essentially the research center, the technical research center in Sunbury, in London. And so I moved across there and worked some of the biggest experts in the company, some very famous names, the company, geologists, reservoir engineering. And so just was fortunate enough to go and tag along with those guys as they went around the world and learned a lot more about various reservoirs. I specifically remember a trip to Venezuela, very very big on the news right now when essentially BP was getting a pull out. So, just a lot of chance to learn what works and what doesn't work. So very privileged to do that. Then the company announced the Amoco merger, and I was in the UK at the time. So they said, hey, actually, do you want to come up and get involved in figuring out how to merge Amoco culture with BP culture?
Okay.
So I went to the North Sea. We got involved in that. And about the time that kind of project finished up, I was headed back to Alaska to do some satellite work, actually, Prudhoe Bay satellite work. And I got a phone call almost as I was at the boarding gate to say, did you hear about the ARCO deal? You've just done it with Amoco. Can you come and join the team to figure out how our Alaska operations can merge together? So I came back and worked in that team. Unfortunately, that was a wasted summer, a really sad wasted summer, because obviously Alaskan summers can be amazing and we spent all our time in the office. And then even more disappointing, the Federal Trade Commission intervened and we had to sell all of Arco Alaska at the time. The interesting piece on that, there was a new field, Alpine, in Alaska, and I really wanted to go to that, and actually kind of lined up informally a job being reservoir engineer on that brand new startup, but that got divested. So I ended up back on the airplane, back to the North Sea. Ended up in the North Sea for a good stint of time. Started as a reservoir engineer, moved into more project development, working closely with the wells team, and then into more asset management as well. And then one day somebody walked in and says, you know what we're doing in Azerbaijan? You really need to go there. And so I'd already been in Prudhoe Bay, a massive field. How about go out to Azerbaijan, where this massive ACG field, the Azeri Shirag Ganeshli field, and this massive Shah Deniz field. And so went out to the region. I spent 8 years there. And I think when I arrived, production was 100 or 200,000 barrels a day, and then saw it all the way grow to over 1 million barrels a day. And ended up kind of working my way through various asset manager roles. But in the end, my last role there was in charge of production for the region.
Right.
Absolutely fascinating. Just get a chance to look at two major assets as you build them up. One, which was quite known in several areas, and then the other one, Shah Deniz, which wasn't well known. So I think that really kind of a big opportunity for these massive fields. And I'll come back to that because, you can see Kodiak. It's the excitement size of that scale of Kodiak.
Mm.
And to be honest, I came back into some central roles. There was a little bit of a interaction with my wife going to decide to get veterinary degree, a veterinary medicine degree, and that was in Edinburgh. So I ended up with a job in London and commuting up and down between Edinburgh and London. And that central role, though, I came to work for Max until Max decided to leave BP, and then I replaced Max. First in London, even though Max was in Houston, I replaced him in London and then moved to Houston without changing roles. Then from there, I ended up deciding that I want to do something different. So I went to work for Microsoft.
Right.
And Microsoft decided they wanted to create an industry team. So I spent a year and a half or so there. Quite fascinating. And a lot of folks will know I love the tech side in lots of different ways, but it wasn't my home. So I came back out and focused more on oil and gas. And then I got the phone call from Max. I should actually say it the other way. I heard he was coming back to Houston, and I said, let's grab a beer. And he says, great, let's meet on this afternoon. And I was in my shorts and polo shirt, ready to go kind of have a nice drink on a patio in the nice Houston weather. And then at the last minute, he says, oh, you might want to wear a kind of tie, or not necessarily a tie, a jacket and a shirt, and kind of swing by the office first. And I walk into the office and he says, oh, you have to meet David, our chairman, first. And so you can imagine.
It was a sprung interview, was it? Okay.
Yeah, exactly. But I mean, the first question I had, to be honest, is how can there possibly be assets in Alaska right next to the road, like at this scale? So I was fascinated by it. And, it really brought me back to where I started. How could I say no? Where I started with the company, I'd gone out and worked on massive fields, other places, particularly in Azerbaijan, and then come back to where I started, come back home almost from my career perspective at these assets. And so, super happy to be here. Very privileged to actually be invited to do that.
Yeah, as you can tell, Erich and I's careers are quite intertwined. And as I said up front, we don't have a geoscience problem here. We have a development engineering challenge. And it's not going to be solved with brute force. It's going to be solved with creativity. There's no route map for this. And I couldn't think of anyone better to lure into the company with that in mind than Erich.
Yeah.
Mm.
That's amazing. Max, given your extensive background in unconventional resource development, Permian Basin, Montenay, as you mentioned, what lessons that, just talking oversight, big picture here, what sort of lessons from those plays are most applicable, do you think, to achieving production in Alaska in this Arctic environment?
I think the way I describe this is not only was I a leader in the unconventional world, I was a student of the unconventional world. And the three cardinal sins in the unconventional world. The first one is don't overcapitalize.
Mhm.
A lot of people want to appraise these reservoirs to the extent that it's the 40s reservoir or something. So you have to delineate it 50 times before you drill the development well. These are quite capital intensive developments. So you have to be very, very careful with that. So we're very mindful where we spend our money.
Mhm.
The second one is don't get past your appraisal objective. I used to remember that I won't use any names, but competitors would stand up in front of the analyst. They drilled a well. We've cracked the code of the Wolfcamp Shale, and here's 2,000 sticks on maps. More complicated than that. And the third one is be very, very careful with your G&A. Don't get beyond your skis. So if you get those three things right, you're on the right track in the unconventional world. If you embrace it purely as a conventional reservoir type person, you get off on the wrong track. And so we're embracing all three of those pretty carefully here. So I think we're on the right track.
Yeah, and just to set this flight deck episode in context, a year or so ago, we were looking forward to Megrez, and then we were also looking forward to perhaps the gas line catalyst and then drilling the Dubby appraisal well. And we've had a tough, we need to recognize we've had a tough year in that context. Things haven't gone as planned, and appreciate you guys joined the company with that forward program of works already in play. And so I think it's good to recognize that's where we are. Obviously, the company's been prudent with their finances in terms of if things had run better, we'd perhaps had more cash in the bank. And but here we are. Obviously, a huge share price fall in the last month or so as well. Has your view on the assets changed from what you saw in terms of asset potential when you joined, given recent results?
Not really. Flight, the way I think about this is there's a big difference between shareholder perception and shareholder value.
Mhm.
The intrinsic value of this portfolio is the same or not higher than when I joined because we understand it better. It's true there's no demonstrable commercial production being produced today. What we have is we have one giant field. No one's disputing it. It's the largest field discovered onshore in the world in 2022. Yes, we have that.
Yeah.
It needs some more appraisal work to define it for developments there. And we have a collection of satellite fields. We always confuse people with our naming conventions of this horizon or this well or this bear name. Let's just call them a collection of satellites, which are all oil bearing. And we have to crack the code to make them commercial. And what Erich and I are trying to figure out, as someone outside looking in at Pantheon, in a football analogy, it's like taking one shot on goal at a time, and that's the only shot that counts. If that one goes right, great. If it doesn't, well, all is lost.
Yeah.
You need to take multiple shots on goal with a portfolio like this. And so, as far as I am concerned, we need to progress Kodiak at scale because it is a massive reservoir with endless potential for a company our scale. But the satellites are meaningful because traditionally, if we were a very large super major, we'd be going straight to Kodiak right now, and there'd be 10 appraisal wells in it because we have $1 billion balance sheet behind us, and we can take that sort of portfolio risk. Being a smaller company, you can't really do that. So one thing I will say, I can only say this because I'm an Alaskan, is whenever I bring up Alaska to someone who doesn't understand it, I get a sharp intake of breath, and people ask three questions. The first one is, isn't it really cold there? Yes. But what they mean by that, isn't it technically challenging? And the second one, which is relevant to the satellites, is, isn't infrastructure really expensive there? Yes, it can be, depending on where you are. And the third one is, isn't it really hard to do business in Alaska? All those things are going our way, but the one in the middle is important for the satellites is because they are sitting essentially underneath the Dalton Highway and the Trans-Alaska Pipeline. And because surface infrastructure is fairly expensive in Alaska, it makes sense to develop things that are closer first. And that's why we're looking at the satellites at the same time as the main field. Is from a capital efficiency point of view, they're very attractive simply because of where they are.
Max, just to really to maybe dive into that one a little bit, I think everybody can see how it makes sense to really target the satellites as a priority. But I would say since the merger with Great Bear, we probably spent in excess of $300 million in our appraisal program, obviously our exploration program, and that's really across both the Ahpun and the Kodiak fields. But when you sort of weigh up the proportion of the spend across Ahpun versus Kodiak, probably at least $200 million has been spent on Ahpun. And I would say, from a shareholder point of view, we're probably no closer to cracking the code, or it certainly looks from this side of the fence that we're no closer to cracking the code than we were perhaps when we did the re-entry at Alkaid 2, where we got certainly a much better result at this point than we got at Dubby. I appreciate there's more work to do at Dubby. So really, at what point do we decide that we're not going to spend any more money on the satellites and we're just going to pivot to Kodiak?
Well, I think we're a long way from that. What I would say is the previous administration were very, very, very talented people, but they had a very static geoscience view of the world. They're explorers. So the objective is find static hydrocarbons, and that is success. When the board decided to pivot the company to development company, they brought in development people. We embrace this from a development point of view. So how does oil move through the reservoir? How do you get to the surface? Not just is it there? So the last 9 months, myself, Erich, our subsurface team, we've been interrogating heavily how does this reservoir actually work?
Yeah.
And the success isn't, here's a great well, we've cracked the code, like the person jumping up and down saying, we're going to put 10,000 ticks on maps now. It's that foundational understanding of how these reservoirs work. And out of that comes the development concept that monetizes them. Because a lot of people think I think the term has been used in the past, Permian on steroids. This is not an unconventional reservoir. So you can't embrace it like it just happens to be the Wolfcamp Shale sitting under 2,000 foot of permafrost. Every reservoir is different. And so what we've been doing is understanding this reservoir from reservoir engineering principles. How does the fluid flow through it? And that will dictate the value of the satellites. It may look a lot different than an unconventional well when it's all said and done. All that means is we have a different engineering challenge. And engineering challenges are all solvable. But first of all, you have to know what problem you're trying to solve. And that's what we're trying to figure out through reservoir dynamics right now. So I would say we're a lot further along than we were 12 months and certainly 36 months ago in that regard.
But we're not really at the point from a satellite's point of view where we have enough understanding to put together a realistic development plan for the Ahpun field.
Well, we haven't communicated a development plan externally yet. If that's what you're suggesting. And it's probably not the place to do that.
Yeah. No. I mean, I would say, and I appreciate you guys are relatively new here, but if I go back to the first half of 2014, for example, 2024, we re-entered Alkaid at the end of 2023 to do the vertical test in the SMDB reservoir. And we delivered some results from that, which allowed us to put together effectively a baseline for development. Fast forward to now after the Megra as well, and it kind of sounds like we're sort of dialing back on those assumptions that came out of the Alkaid 2 re-entry because we're not confident that they're really valid based on the results that we're seeing from Dubby.
I think Erich and I are embracing this from white sheet of paper. But you can imagine the world in 1989 when Lee Raymond stood up and said, the chairman of Exxon, there will be oil is uncommercial from shale. We've tried it. It doesn't work. Well, look at it now. And so we have a well or two in the ground. We can't say, it just doesn't work and move on. We just have to solve the problem. Again, geoscience problems are hard to fix because you can't fix geology. What we know is we have reservoirs full of oil. That's a great place to start. The engineering challenge is, how do you make it work? The unconventional world is a very extreme example of making that work. In our little hot dog stand here, how do we make it work? So we're not even close to giving up on this because having this much oil in the ground underneath the pipeline is just too compelling. As Erich said, why in the world has this never been developed before? It's because no one tried. That's why. And that's what we're doing.
Just a couple reflections as well to expand upon that. The Alcade results, I know were perceived to be mixed in the market, but there's incredible potential there. We wouldn't still quote on our website both the Collie Gillespie and the Lee Keeling reports and the resources that are in there if it weren't for the fact that we have confidence they're still there. And to be honest, I think, and this was the course was, as Flight alluded to, the course was kind of set before we arrived in terms of marching south to test some of these areas. But, we're 100% equity. We're a small company with 100% equity. You kind of want to go and test any of those potential options before you kind of make decisions on your portfolio. So I think, going after Megrez, which had incredible potential, we're oil and gas. And so sometimes you don't necessarily get the right outcome. And we still have opportunity there that we need to progress. And I think we'll probably want to revisit that at some point in this conversation. But then Dubby, we're partway through that. I think Max alluded to where we have to learn a lot. And I think we already have the execution of the well, fundamental step forward relative to what Alkaid 2H was like. And, right now we have so much additional data that's being analyzed. We're going to learn a tremendous amount, which comes back to Max's point. There is incredible amount of upside here. We just got to learn the engineering side of it. And I'm an engineer, so of course it's easy for me to say that. But you don't get it right on the first time on the engineering. And I guarantee there's going to be a lot of good learnings, which is not learnings what not to do, even though there'll be some of those, but it's actually starting to say, how do you get this and engineer it in a commercial way? So create a proper production company.
Yeah. How do you balance operational execution then with investor expectations? That's incredibly difficult. Like when the investment world has an unreal expectation, really, that every well's going to hit. You're gonna get the system right. Max, Erich, who wants
Yeah,
to step
sure. I
in?
mean, the civil engineers, they build bridges and they do calculations. They know exactly how much cement and rebar is required and the forces and all that. And you can pretty much guarantee you're going to get the bridge that you designed if you follow the procedure. In the subsurface world, it's always enormous uncertainty.
Hmm.
You're describing 50,000 acres with 1 8-inch hole and trying to extrapolate that. There's always a wide range of possibilities here. So in the investment community, you have to have a compelling reason to invest. And I'll get back to that in a second. But there's always going to be uncertainty. And it's very difficult for people to embrace that because they think more about bridges than they think about developing reservoirs. They want a definitive answer. Is it going to be good or not? And that's really hard to articulate in the upstream oil and gas world. And so that's the world we sort of live in, is how do we maintain confidence because we believe the resource is good without being too definitive, because if you're wrong either direction with a definitive answer, you're wrong. So it's really a tricky space. But if we were a bigger company, one thing that bothers our shareholders is the news flow is quite slow. So it's one well a year or something. What happens in between, and one shot on goal in a year. If we were drilling 10 wells this year, we would crack the code with 10 wells. But being a small market cap company, you can't really do that. And people are used to companies like Shell or Exxon, putting 10 wells in Liza and in Guyana, and all of a sudden they have a multiple billion barrel field. It's hard for us to do that given our scale. So we have to be very slow, very measured because of our financial prudence.
Yeah, Erich. So in that regard, then, how can a minnow like Pantheon position itself amongst kind of the big boys on the North Slope? How are you going to get this job done?
Fantastic question. As we've alluded to before, the company's been around for quite some time, and I think there's plenty of learning. I mean, the big thing is we talked about the Kodiak, we talk about Apoon, we might refer to the satellites. We have a huge portfolio. So I think the company, in fact, our predecessors have done a fantastic job of finding some amazing resources. So what really needs, and maybe it's not as exciting perhaps to some folks that are looking for, kind of the roulette table or the slot machine or whatever else. But what brings me to work every day is bringing something to market. Producing something. Almost all companies produce a product or deliver a service. So kind of getting into that kind of minnow you're saying is getting the right expertise around it. And then
Mm.
to be honest, the right investor. And I say the investor, it's not just about the money. It's actually about the technical expertise. And so we've talked quite a bit around the financial prudence piece because that gives you a bit of runway to be able to deliver. And I know there's some criticism about why would we stop Dubby, and we can come back to that. But
Mhm.
actually want to make sure you have that runway to be able to have the right conversations. We have gone out and obviously started to look and say, who could be our good partners? And again, like I say, these partners are not ones that bring just money to the table. That's important to us, but actually that really can help us crack some of these opportunities that are out there, whether it's the engineering challenges or whether it's, the analogs. We still haven't found a really close analog. And so I think that's how we do it. And it's, you can have conversations about whether it's diluting yourself or not, or diluting the business. But actually, it's about, you may lose some of the equity perhaps, but you actually bring in a lot more power, whether it's knowledge or whether it's finances.
Okay.
I can add to that. Pantheon holds this asset 100%. It's very unusual for a company this scale to own an asset this big at 100%.
Mm.
It's intentional because dilution comes in many forms. You can issue equity, well, you can buy back equity. You can take debt, you can pay back debt. When you dilute and sell your asset, you can't get it back. So we want to
Mm.
make sure we've appraised it sufficiently whereby we're not destroying value for the shareholders that they can't get back. This is a very large resource. The odds of a little minnow called Pantheon 20 years from now operating 500,000 barrels a day across this or something is pretty
Mm.
remote. At some point, you're going to bring in a partner. But as Erich says, it's not just about the money. It's about the capability, strategic alignment, etc. So we're trying to position ourselves to create the leverage. And one place we have an enormous amount of leverage is with the state of Alaska.
Yes.
The state of Alaska loves us because they want a viable independent on the North Slope, but also we're a big part of the gas story. Um,
Yes.
the state is desperate for a gas pipeline. They have been for 30 years. One of the problems with that is getting the supply at a reasonable price.
Mm.
And for us, our offtake gas, and there's plenty of it, is more of a cost and a nuisance than it is anything else because it has no reservoir benefit. So for us, we have to compress it and re-inject it, or we can sell it at a very reasonable price to the state of Alaska to make the pipeline viable. So we've leveraged ourselves very strongly in that dialogue. Um, but also we hold all the cards on this asset still. So I know our shareholders get frustrated with the dilution, but this has to dilute in some mannerism to finance a major development. It can come through equity or debt, but just be careful with diluting the asset itself because you can't ever get that back.
So you're looking for the right partner, interested in the right aspects of the asset base. So a direct question. So is a major going to be interested in the satellites, or is Kodiak the kind of the thing?
Yeah, we announced that there are multiple parties looking at us right now,
Mm.
and they come in all shapes and sizes. The bigger the company, the more interested they're going to be in Kodiak, because big companies don't do small things. But some companies are more motivated by near-term cash flow, smaller ones. So they're going to like the satellites. The big ones are going to like the big one. And out of all of that, we'll figure out the right partner based on what creates value for the shareholders, short-term and long-term. And related to that, some of your listeners, viewers will have noticed there was a lease sale in Alaska in the fourth quarter of last year. Pretty much all the acreage around us was gobbled up. So we're surrounded.
Yeah, that was Repsol, right?
Well, to our northwest, basically surrounding Kodiak was Repsol.
Mm-hmm.
To our south, surrounding our satellites, was a company called Burgundy. And to our east, across the Sag River, is a company called Surprise. And
Surprise
so we're
Valley.
basically surrounded by people acquiring acreage around us, which again should give our investors confidence that we're in the right spot.
Yeah. Okay, so we have a 100% working interest across 258,000 acres on 100% state lands, independently certified recoverable 2C resources, 1.2 billion barrels in Kodiak, right? 6.6 TCF of natural gas. Do you want to put that in perspective of how ridiculous that is?
When you say X billion, you're in rarefied air. To put this into perspective, my previous employer, Apache, their total proven oil reserves is 300 million barrels. That's a very large company, and 900 if you include their gas. So our 3 billion equivalent is a X on Apache. If you converted our resource to reserves, on liquids, it'd be a 5X. So, and here we are, a little 100 at the moment, $150 million dollar market cap company. We have the potential to, have a 3 or 5X on a very large independent mid cap in terms of resources. And there's an old saying in oil and gas, which I've never forgotten: the company with the best rocks wins. You can't perform if you don't have resources. So our starting point is we're sitting on a lot of resources. So the question is, how do you attack them the right way?
Yeah, I mean, as an investor, that's why, I looked at it and thought these rocks, the kind of source rocks, produced a significant amount of hydrocarbons across this acreage. And at some point that's coming out. Now, 4 years ago, I invested something like 40p. We're now down at 7 with further dilution. So I'm not the world's greatest investor, obviously, currently, but that was the basis of the investment. And I'm hearing you say that this resource is significant and majors would be interested in looking at this. You've said people are in the data room, and it's whether we plan to move into Kodiak from the satellites first and sort of daisy chain across, or whether or not you head into Kodiak with the partner. So I guess what I'm hearing is you suggesting that all roads lead to Kodiak, right? In any event.
All roads lead to Kodiak. I love it.
So that's
great.
Sounds like a song.
Yeah, we could write. Okay, I'll grab my guitar. We'll write a song that all the roads lead to Kodiak. I hope it's not a blues song, but it's kind of some kind of party song.
Absolutely.
I guess so really, really interesting listening to your background's incredible depth of experience. You're excited. You came to the company and then you took on board a program of works that were already in effect. Megrez was attractive. We drilled Megrez. We're undecided. Alaska Geophys and I have a theory of it being a residual oil zone, and that eventually the water will get out the way. We, there's significant oil in those cores, 60%, I think, was it, oil saturation. But we flowed water, end of. So we have to move on. We're a tiny company, and we've not still hit the home run that allowed production to start and to start ramping up the cash in order to then go after the bigger prizes. So that's how I see it for anyone joining the story who are interested in kind of this sort of investment. Kim, where do things sit to date with you? Do you just want to give us your overview of kind of where you're a year in? Where are you leading this company, Max?
The way I think about it from a resource-led point of view is, again, we have a mothership, which is very large, called Kodiak, and we have a collection of satellites. So we need to figure out really soon is not just jump from one thing to the next and shine a light on it. We understand the portfolio of what we have here. So the mission for this year is we need to finish what we started to appraise updip Kodiak. The updip Kodiak is a massive resource that we could add to our portfolio, and something we would probably like to high grade and pace if it's as good as we hope it is. So we really need to put a well in Kodiak. Before we do that, we have some geophysical work to do. Make sure that we don't have the luxury of drilling 8 wells. We're going to drill 1, so it needs to be the right one. So reprocess the size, we can get a look at that. And that puts us in a great position to promote Kodiak or start developing it ourselves. For the satellites, this whole collection, Apun North, Apun South, Alkaid Zone of Interest, fan systems, all this collection of satellites, what's the right combination, given the way we understand the reservoir, that could lead to a short-term FID? And is that a good thing to do? So we have tons and tons of data to go through. I think the difference over the last 9 months, this is not static G&G data. And there's actually dynamic data we're going through. What do we actually learn from the alkyd flow tests? What are we learning from the Dubby flow test? What does that mean for how fluid flows through the porous media, et cetera? So coming out of this is a more holistic approach to the company, not the next shiny thing we're going to go do, the holistic approach to take us from resources in the ground to a development plan.
Alaska Geophys, do you want to just perhaps take us through where the company's operationally at the moment?
Again, I've known Max for a number of years. And again, Erich, we worked at Prudhoe at some point, although I didn't know him directly. I just kind of saw the face occasionally, but I'm glad they're on board. I wanted to talk a little bit about Dubby. And you kind of hear on the various websites with Share Chat that, well, we got a lake of water down there, or there's no pay. We've got the company's already decided not to, come back to Dubby. It's just a pause, pivot to Kodiak. I'm very optimistic about Dubby myself. I've worked this area, I've done the seismic, but what I'd like to do is with sort of the football analogy, and I did this with David last time we spoke and Justin, is to I'll be the guy up in the box talking about the game, the football game. And I want Max and Erich to jump in and talk a little bit about the color commentating of the players, the coaches, and the fans. The fans being sort of the shareholders. You've already heard a number of people talking about, well, there's some disappointment. Some people hanging in really think Dubby's going to come back, and they're really looking for the big Kodiak thing eventually being developed. But let's kind of start with why you picked that location. You originally had a map on your website, KH, K being permeability and H being thickness. And there's a very sweet spot with the right colors that looked like it was some distance away from a potential gravel pad for Dubby. But you guys going to drill extended well and hit that. And then again, pilot, I don't know if that was originally in the game plan or not, but you're going to do a 3,000 or 4,000 foot well, which you ended up doing 5,200 foot, which is amazing with that neighbor's 105 rig. So just kind of walk us through a little bit from how you picked the well, the early drilling of it. And again, I'd like to knock down all three of those things. That there's a ocean of water down there that we've hit. 2 is that you guys have already given up on the well, which you haven't. And 3 is Kodiak isn't a pivot. It's just a mutual thing to go after the big prize and get someone else to help us pay for it. So
I'll start this one because I love your analogy. And what I'm going to tell you is, again, as a executive and student of our industry, in reservoirs like ours, including conventionals, there are 4 steps. Step 1 is, can you map it out and do you have a static description of the reservoir? Step 1, we'll call that the first quarter of the game. The second quarter, before halftime, is, can you demonstrate a commercial flow rate, commercial quantities? Now you're in the second quarter of the game. Then it's halftime. The third quarter is, can you demonstrate the capital efficiency to make the resource commercial flow rate attractive? And that's not enough. The fourth quarter is, can you operate your enterprise at scale to generate free cash flow? You don't use all of your cash flow to reinvest as CapEx. Those are the 4 quarters of the unconventional world. We're sitting at the beginning of the second quarter here. And so the previous team and yourself involved, we really understand the mapped resources. We know where they are. Question is, given the nature of this reservoir, how do you get a commercial flow rate out of it? So I've been to lots of football games where in the second quarter, someone's an interception and some say, oh, the game's over. It's the second quarter. There's still a lot to happen here to demonstrate the flow rate. The next step is the capital efficiency. That's not a small challenge either, to generate our own supply chain to sustain this at high cost area to maintain its commerciality. That's not a small challenge. And the last one is, of course, at scale. Can the satellites actually fund Kodiak and things like that? So it's early days. But as we entered this well, Erich, give a run through of our thought process at the time.
Yeah, thanks, Max. So if you take a step back and look at the Dubby area, I think people have probably heard the story around Pipeline State, a well drilled by Arco in 1988. Really good quality core came back. The core looked very good in terms of that. And it was a big section, 450 feet, somewhere along those lines of reservoir. Um,
Can I ask a question on the core? Can I ask a question on the core,
yep.
Eric? Sorry to cut in. I think and Rabito, help me out here because we've discussed this a couple of times. The percentage of oil in the core from pipeline state is it's actually quite a low percentage. I think the highest number in that core for the SMDB reservoir is something like 9%. Is that right, Rabito?
I think somewhere around there, yes, certainly. I know there's been discussion on Discord about it, so.
I just thought I'd
No,
ask you
it's a
that,
good question.
Eric,
Yeah.
just because, and the reason actually is because when you look at the Schlumberger modeling data for the Dubby well, we obviously expected a in the high case quite a good flow rate for both the liquids for oil and NGL, which doesn't directly correlate to the percentage of oil that was in the core. I don't think.
Yeah, absolutely. And there's lots of different elements here, and we can get a little technical in this. And let me try to get the highest level
Keep
just
it
to that
simple for
core
me,
point.
Eric.
Yeah, exactly. So so imagine hydrocarbons, a very volatile liquid versus water. And so, for those of you that like whiskey, perhaps, um, distillation process, you heat it, then what you do, you condense the vapor that comes off first. So the first thing when you get core, you do get vaporization, and the first thing to go is going to be the hydrocarbons. So those are the first things. It gets even more complex when you're talking about low permeability because you end up with these capillary forces which create movements in there. So that can actually exacerbate the calculation from a simple calculation of the water saturations. So yeah, obviously that conversation's been had, before our predecessors very much spent time in there. And so in that space. And so the companies outsourced, brought in experts to look at this and tried to calibrate the logs from that perspective. So we don't think that those cores are fully representative, but at the same time, you have to consider you can't throw out the data. So that is something to consider. One thing I'll also say is, the seismic, if you look at the seismic, which is a good indicator, first of all, of the rock, but also the fluids that are in it. If you look at alkade and compare the alkade in the north, the SMDB in the north versus the SMDB in the south, the south glows. It lights up, which tells you, you know, probably better quality and probably and potentially better fluids as well, more hydrocarbon based. And so kind of that whole evolution, I think, is the way the question was framed up. You know, I'm personally think the Alcade results, even though I know the market saw them as quite negative, at least from the stories that I hear and, from the share price, I think it was a great result. So why wouldn't you go south and try the W area where we have core and we've heard stories about the ARCO team at the time were saying there was oil coming across the shakers when they drilled that well. So it was too much of an opportunity to go down there. So let me pause on that, see if that kind of starts to answer the questions. I'd like to come back to some of the other questions that were posed.
Yeah, it definitely does.
So again, as a geoscientist or a man who knows a little bit about other things too, but you've got the logs, you've got the LWD, you've got wireline, you've got all types of things in your toolkit, including the VAS, volatile analysis work, and you've got the people like eSeis that are looking at the core, calibrating it in time with the seismic and the well logs. So they look at all those things and they may discount some more than others. For example, the core I've looked at also. But I think you drilled with oil-based mud in the W well, and that's going to have some of less filtrate and invasion of the core than perhaps a water-based mud did at pipeline state. So it doesn't bother me too much. And when you plot it up again, you see that a lot of the light hydrocarbons probably were basically vaporized out of that core at the time because of either handling or pressure from deep all the way to pressure shallow. So it doesn't bother me. What I think we also want to talk a little bit about is the flowing. You completed the well. Tony did his improved learnings. He's changed the proppant size, under mesh mostly, I believe. And we did 25 plug and purse. But can you talk a little bit about that? And then when you hung the tubing down, Can you tell where the gas lift was coming from? Was it very deep or was it shallow? And is that part of the reason why we've had a little harder time loading all that water? 200,000 barrels or 225,000 barrels of water. That's a lot of water.
Yeah. Let me walk through a few of those because I kind of got and started talking about the historical well, which wasn't ours, which was Pipeline State. But as you described, when we drilled Dubby, we drilled the pilot. I think there was a question earlier about why the pilot. What we wanted to see is we wanted to know how big this reservoir is, the target reservoir. We also went down into the slope fan system below. So this was about continuing to appraise some additional resource. And we got a tremendous amount of data. We recovered core. We got rock out of the ground, whole core, basically the whole of the hole. Two different versions of the word hole, as well as some side cores, sidewall cores. Basically, took some samples out of the side. And when we drilled that, we had the logs, as you alluded to. We also were getting cuttings back. We analyzed the cuttings. We also got gas coming back. And we're analyzed that gas, and that gas showed that it was associated gas, basically the gas that comes with oil. All this showed we had oil. So I think from that pilot, we got a lot of confidence that this was a hydrocarbon bearing without question. And if we hadn't gotten that early on, we wouldn't have drilled the lateral. So I think everybody knows we did. We proceeded with the lateral because there was no evidence. In fact, to this day, there's no evidence to suggest that we shouldn't have tried to drill that well to really test the commercial rates. I think some of the other questions you're talking about, so we did sidetrack the well. We were targeting 4,000 feet. We delivered past 5,000, and we could have gone further, but we actually held back to our objective. Our objective really was to get a commercial flow rate out of this, and going further and taking the chance of losing it wasn't worth it. So the team did a tremendous job. I think you talked about the mud. We have no indication at any time that we lose any sort of wellbore stability. The hole was perfectly round the whole way. And we saw that from various metrics. I won't go into the technical aspects, but tremendous success from that perspective. And then we ran the pipe into the ground and cemented it, and then did the completion, and a huge amount of learnings in that. A lot of them learned from what didn't go quite as well as we wanted to on Alkaid. And for those that don't know, Tony Beilman was brought in kind of at the end of the Alkaid teach and did the initial analysis to say, what were the learnings? And I think, across multiple aspects, and you've alluded to a few of those, we got a tremendous results. There was a fantastic outcome from bringing up a Canadian company as well to kind of shake up the supply chain, who instead of doing just day shifts and getting maybe 1 or 2 stages a day, we're doing, up to 7. We saw up to 7 in a single day. So not only did we get efficiencies and this financial prudence kind of piece coming out, capital efficiency, we got a great result. How do we know we got a great result? We brought this well on. We got fantastic rates. We didn't get any sand back. That was quite different than we saw in Alkaid. So, I think we should really, really count that a huge success up to this point. And I, for those that have paid closely attention on some of the webinars, I talk about safety quite often. If things don't go right from the safety perspective, all else, doesn't really matter. And that's whether you want to call it in terms of the care for people or the environment, but it also comes down to the bottom line. It hits you straight across all three. So that's important. I saw somebody wanted to get a question.
Yeah, back to the football analogy, I guess. In Scotland, you can't play a game of football without there being criticisms thrown at you from the sidelines, and I guess I'm the only Scotsman in the call, so here goes. No. So I wonder if you could talk us through kind of the decisions behind stopping the well, what happened then. We then, when it was stopped, we took the decision to raise some money in January as well, and obviously the share price not at its highest point certainly. And then I guess if we're at half time or having a pause in the game, then maybe Erich, Max asked the first part, maybe you can answer the second part. What does the halftime entertainment look like in terms of what are we going to get in terms of information wise from the pressure tests and perhaps the core work? So a number of points there, but if you could take them through them this. And I deliberately left out the swear words, which would normally happen as well.
We normally bring a translator in for Rabito, but you guys have been up Scotland before, so
Fortunately, having lived in Aberdeen twice and still owning a house in Edinburgh while my wife was getting her vet degree, and the fact she's actually Scottish as well makes the translation unnecessary from my perspective. But I don't know. Coming back to your question, I think, in terms of why did we pause? And this is almost, you go to Las Vegas or something, and you can keep putting money on snake eyes on the on the craps table or something like that, and you gotta watch your kind of financial position. I mean, just to put it in perspective, and this is round number, $1 million a week. $1 million a week to flow W1. And how long do you continue to kind of ride and wait for that, especially in the context, which comes to the second part of your question, when you've gathered so much information at this point? We pulled out a tremendous amount of volume out of the reservoir. I know it was only about half of the water that we put into there, but we did get gas out of there and we did get some oil out of there, out of the reservoir. And at the same time, we had all the various information we described from the logs. We have core. We did the routine core analysis, which gives you some high level information, but it takes time to really get that core cleaned up. And we can also do some special core analysis. That special core analysis really starts to get to the heart of the way the fluids move in the reservoir. And so that takes time. So we're in the process of doing that. There's also some seismic technologies called inversion that have not really been done to date. And this is not to be mixed up with the reprocessing, by the way, for Kodiak. This is very much more relevant to the Dubby area, the Appoon. And so, with our new geophysicist on the team who came just before Max arrived, he's an expert in this space. And so we can do this in-house. This isn't spending a bunch of money. We can get a lot more information of what the distribution of the properties of the reservoir can be. And then just to put a little bit more around the pressure data, we ran a pressure. Basically, it's a memory gauge. It's a gauge that's in the tubing, so it's actually a piece of the tubing. It's a memory gauge, so we don't see it while it's collecting the data. So it's been collecting the data since day one. So not only is collecting the pressure buildup data, it's also collecting the data during the flow test. So we actually can measure how hard we pulled on the reservoir. What we've done to date, we have to calculate and estimate based on the top hole pressure, which isn't great. It isn't accurate. But when we shut this in, then we get a pressure buildup. And after kind of 2 months, round numbers of flow production, we not only get that dynamic drawdown period, we also get the buildup. Now, these are tight reservoirs, and tight reservoirs take a long time for the pressure to build up, multiples relative to the flow. So if you do simple math, 2 months, if you look at tidal reservoir, you can say you usually need 2 to 10 times, if you just go out there and generic, 2 to 10 times a period, if you really want to see the scale and connectivity of the reservoir. Now, we're not going to go to the 10. The 10's a perfect world, and business always takes over the technical side. And, you can get to a place where you get the right compromise, but it just gives you a sense of the time that's needed for there. So one thing we do want to do, we want to get that pressure buildup, and that provides a lot more information for us to build reasonable predictions and forecasts with an expectation that when we do bring it on, the oil will cut through. So we could continue to have spent $1 million a day, and then got to the end and say, actually, now we got to do a pressure buildup, and now we're going to have to do a bunch more analysis. So this, for me, is not wasted time in a simple perspective. There's a huge amount to play for, a huge amount of analysis, and we can also calibrate this back to what we've seen in the places like Alkaid as well, and then really allows that take a step back and say, what's our portfolio look like, and how's the best way to march forward on this? So I don't think we wasted any time whatsoever, and I think we were doing the most financially prudent thing to do, the right thing for the company. Especially when we have so much to play for here.
Can I ask a follow on from that then? I'm just going to represent shareholders in Flight's Discord server. Their question would be, so why was there like an expectation or an early expectation of the oil to cut sooner? And why are we still waiting?
I can answer that one. Need to remember, this is an appraisal well, not a confirmation well. And really no analogs for how this well would perform. This is the analog, really, for this reservoir.
Mm-hmm.
And so one of the releases said something like the well will clean up in a couple weeks. What that meant was any sand would be cleaned up and then we could flow at steady state, not that oil would cut in 2 weeks.
Right.
If oil cut in 2 weeks, that would have been sort of a P1 outcome. But the exam question or the analysis here is this is not the Wolfcamp Shale. In an unconventional well, and I've done 1,000 of them, your frac fluid never actually enters the reservoir because it's so tight. So you prop open a frac, you put sand in it, and you flow the water back out of the frac you just made. And there's all kinds of industry analogs, how long that takes until the oil spurts from the shale into the frac plate. This is a conventional reservoir. And so that 200,000 barrels we pumped in there, a lot of that went into the reservoir. And so there's no analog for this. So in a very lucky case, the oil will bypass that quickly. In a long case, you have to overcome relative perm and other issues. So there really was no analog. So we found ourselves in the middle of December and a couple of phase 3, and phase 3 is the worst blizzards you can have in a row. The way we looked at it was the objective is not to produce until the first oil shows up. We need a period of production to get a representative type curve and understand the reservoir. That could be 30, 60, 90 days. So we would be committing to flowing this all the way through the worst part of the winter, all the way through February, when the cost structure is at its highest. So why would we do that? And as Erich said, we're not losing any time here in our analysis. Why would we just do this when we can see it through? And one of the choices we made, which is one of the reasons we made the decision, was during Alcade, we had a lot of sand production. Was that a bad operation, bad flowback, or a nature of the frac? We don't know. But one thing that doesn't like frac sand are electrical submersible pumps. The artificial lift mechanism we really want is an ESP. But because of the sand risk, we use nitrogen lifting. Nitrogen lifting is extremely expensive. And I think I mentioned it's about a third of our burn rate was just pure nitrogen. So last thing you want to do in the middle of December, early January is do a rig workover. That would be a high risk profile to do that. And so again, we're not wasting any time here. Let's take the pause, and then when the time is right, we'll start it back up again at a time we can see it through. So that's what led to all this. This doesn't slow down our appraisal objective. It just makes certain we can complete our appraisal objective.
And could you give us some just some color surrounding the restart then? I mean, I've heard you say it's a multiple of the time already spent flowing. You've said, I think you used the word spring, but that so investors say that's April, May. But are we potentially looking at June, or what? Could you give us some color on that?
Yeah, we haven't picked a time. As Erich mentioned, there's a lot of reservoir analysis we want to complete before we do that. And we want to make sure we have the data, and the data requires wireline to go get. So it's not like we're watching it in real time. So we haven't picked a time yet, but the time will be consistent with everything else we're doing on Kodiak, et cetera, et cetera. So all these things come together at the same time, which is we understand where we are with Kodiak, we understand where we are with the satellites, not just this one, but the Alcade and others as well. And so, once we pick the right time and what we plan to do in the specifics for artificial lift type, et cetera, we'll be communicating that, but we haven't picked a specific time yet. If we did, it would just be arbitrary. And so let's finish the work, and we'll tell everyone exactly when we want to do that.
So just want to follow up on Robito's question before, which was around funding. And I think probably a question for you, Max, is just some context around the timing of the fundraise. Obviously, there's a lot of data to come back before we restart the Dubby testing. And I think there's an expectation that that data should be positive, or certainly that's our hope. And therefore, it seems odd that we would effectively fundraise now when we're not short of cash. So we're just wondering what the reason for the raise in the second week of January was.
That's a great question. A lot of people ask it. See how that may have come to a surprise to some investors. You remember we released our cash position at the end of the year, some $27 million cash in hand. So it's not like we were out in the city of London with our hat in our hand saying we need money right now to continue operations. This actually came at us. So we didn't go seeking it. Our broker came to us with the opportunity. It's always been our position that being financially prudent, you think 2 steps ahead. In our case, we have activities to come, but we also have and will continue to entertain farm-in discussions. You never want to do that with a position of weakness. So the counterparty has to believe you can raise equity and do it yourself, and certainly not imminently for them to pay us premium. So we have to be on sound financial ground at all times. And so the cash came to us from the broker, and you don't know what's going to happen in the world. There's all kinds of volatility in the world. Would we be able to raise capital in the future? Should we need to, as conversations continued? And so all factors considered, the nature of the offer made imminent sense given our activity program and the farm-in discussions.
And I think in terms of like the cash position, Max, it looks like, I guess for the rest of 26's work program, obviously excluding anything at Kodiak, we're fully funded now. Is that the case?
We only disclose those things at certain times, and this is not one of them. So, our balance sheet and cash flow statement is not a 10-minute ticker. And the reason isn't because we're coy, it's because it gives our competitors and suppliers an advantage if they know that. That capital gives us a lot more confidence going into the summer. We can have our farming discussions from a point of strength, and it certainly gives us confidence in the activity set as we see it.
You can certainly refer me to public statements made already on that topic, yeah.
I was going to add one other thing. I mean, because of the scale of this portfolio, and this is the kind of, the engineer coming out of me, there's way more opportunity than we can afford. Just because, there's Allocate out there. That job hasn't been finished. Dubby job hasn't been finished. Kodiak hasn't been finished. So I think this really comes back to making the right choice and making the choice that's going to be the best for shareholders and really, what's going to be the most value creating path that gets to that, as I describe, a production company. That's where we really want this to go as quickly as possible.
And in the spirit of myth busting, earlier it was said on various chat boards, extremes, this is nothing but water, or it's nothing but gas. I'm sure there's a few extremely positive people out there that say that once you get the frack water back, it's all oil. Erich and I have a combined 65 years of reservoir engineering experience. I've yet to find a reservoir that doesn't have all three. And our challenge is how all three of those work so we can arrive at a development plan. This well is going to produce oil, water, and gas. The question is, what's the right completion, the right reservoir engineering approach, development plan to get the most of the black stuff, a little bit of the gas stuff, and the least amount of water. But you're only going to know that when you assess the performance of this well, and our development plan has to account for all three.
Hey, Max, can I ask you a question?
Sure.
When you guys are doing your plots of the well test before we pause, I assume you have fresh water going in from that lake that's west of you, so no salinity at all. But then you've got the reservoir formation into all the work you've done and other people have done before you. You must have a little bit of handle on salinity for log analysis, things like that. Can you tell us what type of salinity you would expect? And is that a way you're mapping out some of the recovery so that every barrel that comes back is not necessarily treated as frack water, but it could be the reservoirs talking?
I mean, this is a tricky business because when you inject fresh water through an ionic exchange, it's going to come back saline. So you can't measure fresh water versus reservoir water into A plus B equals 100% and do the math. So obviously, we know there's fresh water coming back. It's likely there's some formation water coming back, but you can't really do the math on how much of each. So you get false conclusions in a hurry. It's like 2 equations and 3 unknowns. That's unsolvable. There's an infinite number of solutions to that, and that's what that would be.
But if you see some salinity coming back,
Salinity was rising for sure. But what you don't know is that more time for ionic exchange, or is that formation water?
Okay,
because that's the third variable.
Yeah, and just to kind of put a kind of a fine point on that as well. From day one, we saw higher salinity than what we put in the ground. So it wasn't like there was, all the frack water was coming back. That ion exchange, we're washing the rocks. Simple term, we're washing the rocks from the first minute it went in.
Okay, thank you.
Can I just follow up question on that then? Is there a way, do you think there's a chance that we've somehow changed the chemistry in terms of the frack water's gone in and we've seen a wettability issue over, say, a transient issue with the waters? Transient meaning once the water's out of the way, then we see what the reservoir is saying to us.
Are you reservoir engineer? That's a
He thinks he is.
Student of my very good friend, Alaska GeoFizz.
We would call that low cell in BP speak.
Yeah.
There are lots and lots of variables here. One, salinity and compatibility of salinity, one thing by itself. The effect of fresh water on clay is another thing. The relative permeability impact of imbibition. Since you're a reservoir engineer, you know that's when you force water into a core. So imbibition will affect the relative permeability in your wellbore region. There's lots and lots of reservoir engineering things that could be going on here that led to the delay in oil. And that's the whole point of the reservoir analysis and the pressure buildup survey. The early part of the pressure buildup survey is near wellbore, and you can infer through derivatives the contribution and crossflow of the 25 stages. In the longer version of the PBU is, as Erich said, talking to the extent of the reservoir. So once we start gathering all that up, you can sort of pick which of these issues would be driving that, or is it some combination of all of them? And the reason you want to do that is in the future, when you design a completion, you want to solve whatever problem you think you have. If it is a pure rel perm problem, well, there are mutual solvents that can help with that. If it's a salinity problem, you put potassium chloride or something like that in your completion fluids, but you don't want to just take 100 shots at once because you won't know what problem you're trying to solve or what solution you got. And so for the engineers like Erich and I, we're trying to unpick all of this through the analysis we're collecting to have a working hypothesis of what's driving this behavior. So the next iteration builds upon that to arrive at a solution.
Okay, Robito, do you want to follow up on that? It kind of touches on your day job in terms of chemistry and things that can be solutions.
I actually don't, but I did want to ask a question. No, I think the answer.
All right, I'll scratch that.
I think they answered it pretty well. So there wasn't much more to add. But I did have a question. We were talking about finance earlier, and and one thing we usually always talk about, but probably haven't mentioned on this call is Alaska LNG, and maybe Max, you can talk about where we are regards to timelines on that, and even maybe we brought up Alkyd again, and perhaps what the impacts of gas in Alkyd and how that affects economics up there. So
yeah, there's a lot in that. With respect directly to our discussions with 8 Star and Alaska Gas Pipeline, as everyone knows, we have a gas sales precedent agreement for a price up to $1 and up to $500 million for 20 years. We're the first one to sign that agreement, which went a long way toward creating the viability of this pipeline being built. The next step to that would be a fully termed gas sales agreement. And people are asking, well, does that have to occur before FID, ours or theirs? And the question is, we could sign a gas sales agreement today. There's going to be 2 giant conditions precedent in the agreement. One, a pipeline gets sanctioned, and the other one's going to be a reservoir gets developed. But there's nothing in between us now and then. Now, Glenfarne announced just a few weeks ago that they've signed other gas sales precedent agreements. We're not worried about that at all. They have to diversify their supply, and that will be a requirement for them to get whatever project financing that they need. And they'll probably need some of that to come from proven, developed, and producing reserves. But we certainly expect that we are the low price shipper. And so whenever there's availability for our gas, they're going to take our gas, because you can imagine sitting there as a Prudhoe owner, the cost structure they have is enormous, and they already have all the infrastructure to inject the gas, and injecting the gas helps the oil. In our case, gas is just a nuisance. Please take it. So our price will always be the lowest, and that's great for the pipeline. That's great for consumers in the greater Anchorage area. And so we have no concerns about that whatsoever. Another thing that's occurred, 2 years ago, the whole conversation about risk was about gas. What are you going to do with your gas? So the pipeline has moved on quite a bit, but also all around the lower 48 data centers are popping up everywhere. You can't get enough data centers. And when data center owners and operators look at North Slope of Alaska, what they see is a lot of wide open land, cold weather, and cheap gas. What could be better? And so a lot of proposals are out there for people wanting to buy gas for data centers. So all of a sudden, gas egress is not our biggest problem. So we feel really good about it.
Erich, any overall reflections before we close?
I think from my perspective, is there was a question about why I joined. I'm probably more excited about this company and these set of assets today than I was the day I joined. And a little bit of that's because I know more about the assets. I know what the potential is. They're not just some numbers that have been thrown out by, a bit of legacy. The upside, the asymmetric upside, I think the terminology we use is just phenomenal. And I'm an engineer, and I'm looking forward to engineering a way to create value and create the products. This needs to be a production company. That's where we really create the value. I know it's exciting to find stuff, but producing it's really what we're here for.
I'm just hearing a lot of opportunity from it, both in your voices in terms of what you saw coming to the company. And as Erich said earlier in the interview, we've got way more opportunity than we can afford. The data room is busy. Building on the back of previous results in this area, we had the Arcade Zone of Interest, which produced a so-so result, but, plenty came out of that well. And when you boost that up to a 10,000-foot lateral. So we've got an appraisal program, and it looks like we're expectant on what's coming from Dubby. But in any event, all roads lead to Kodiak. Max, where do you see us heading?
To writing a song called All Roads Lead to Kodiak. But before that, again, I think in the past, one well was seen as Pantheon, or one topic was Pantheon. I embraced the totality of the portfolio. We have a mothership, Kodiak, which must be appraised and ultimately developed because it's just too material not to. But we also have a collection of satellites, which are very attractive because from an infrastructure point of view, they're literally right below the highway and they're right next to the pipeline. So as we go into this year, Alcade was actually a good result. I think people were scared at the time because of the gas. They had mechanical problems, and they just moved on to something else. When I look back at that, I see something which has a very strong chance of being a commercial. So I've forgotten about that one. In Dubby, we're not done with that yet. So we have a lot to analyze on that. We have to finish what we started on Dubby. Out of that is going to come a development plan. We'll look at it based on its merits, but we anticipate we would love to FID a project near the highway. It gives us practice being an oil and gas operator and generate some cash flow. But that's not an end in its own right, because as you coined the phrase, all roads ultimately lead to Kodiak. They have to, because of the scale and materiality and quality of that reservoir. So the first step of that is to really complete the delineation. So we have a well down structure in Talitha. We've got a mid-flank well, Theta West, but the real best part of that reservoir is yet to be drilled, which is the apex or top side of the structure, where everyone agrees that the reservoir properties can only be better. But you don't know that until you drill it. And so instead of having one shot on goal and looking for a result that changes the company, we're taking 3 shots on goal here. So one shot on goal is better understand Alcade and its near-term potential. The second one is to finish what we started on Dubby. And the third one is to delineate Kodiak. And out of that cocktail comes a compelling development plan, short, medium, and long-term.
Yeah, and I would offer a compelling asymmetric investment. Pantheon currently capitalized around about $150 million. Can you believe it? So thanks, guys. Thanks for your insights.
Fantastic. Thanks so much for having me.
Really appreciate you coming on.
Max, great to talk to you.
Take care, chaps.
And from all of us at the Flight Deck crew, cheers, and until next time.
Thank you from all the crew here at the Flight Deck, and hope to see you soon over at Flight's investment server, sharing industry insights for the good of all.